everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook for the Big Six markets. This is where we take a look at all of our Big Six. That's going to be the bond, gold, bonds, crude, the soybeans, and the S&P 500, and we're looking to formulate an attack method or a plan for tomorrow's trading as best we can with what the market is giving us. Now, as always, we're kind of slow again. We're not really getting a ton of movement. We had some nice breakout movement on the news earlier today, but then things just kind of quieted down again, and now we're just right back in this sort of back and forth range-bound environment that we've been kind of stuck in for the last few weeks. Now, before we start jumping into the charts, as always, make sure to swing on over to slingshotfutures.com, scroll down, and join the Daily Outlook newsletter, and that will add you to our email list so that you will be notified every single time one of these videos comes out. And we also talk about different stocks that are possibly setting up, different statistics, and all kinds of fun stuff going on there. Great newsletter to be a part of. And then along with that, in the blog section, we have the market psychology videos, which we post every single day, where we dig into the psychology behind the movement on a specific market so that we can better ourselves for the next day. And then, of course, our live trade room morning prep levels, which we cover every morning for the Big Six as well. If you haven't done so yet, make sure to sign up for a one-day trial in the live trade room subscription and trial information. If you really like it, you can always subscribe to it. And if you really like it, you can join the VIP membership, which has the live trade room included in it. Now, looking at the overall momentum that we have on the bund, we had some beautiful breakaway movement in the morning session. Great bullishness all the way up, but they got a little overzealous right here, right? Huge bullish spike higher right before 8 o'clock, and that kind of sealed the deal for the rest of the day. They had a hard time getting outside of that spike for the remainder of the day and just formed a range. Now, the range high seems to be about between 161.24 down to 161.19, the lows of which 160.98 down to 95. In that area, it arguably could even be said that we're kind of stuck inside this little range right here, all 4 ticks of it. So very sideways, very range bound, and having a very difficult time getting anywhere here on the bund, which basically tells us, you know what? We know that the buyers have upside objectives. Their objectives are still up at 161.33. We want to be buyers, but we want to be buyers after a little bit of a pullback, and not necessarily just a pullback. Also, it would be a nice area to buy if we can get a bear trap. The reason behind that is we have so many traders who are still in this move to the upside looking for that job to finish that if we can scare them out of the market and get renewed buying pressure down here, we should be able to get that fire right back up towards the top side and finish that objective off up to 33. So what I would really like to see is a cycle off of the top of the range, back down to the lows of the range, little head fake underneath 160.95, trap out the buyers on a stop run, and also trap in some sellers thinking it's breaking down, and then shove the market right back up to a new high. Over on gold, more ranges, and you're going to see this is a pretty common trend today. Pardon the bad pun, I suppose it's not really a trend. But anyway, we have a lot of range-bound momentum here on gold, and I mean, just look at it. It looks like a barbed wire fence. This thing is all over the place in terms of highs, lows. Obviously, nobody believes the breakouts are going to be successful right now, and so we need to treat it in that way. We're looking to buy low, sell high, stay out of the middle as much as we can, because as you can see, this middle portion gets nasty, nasty. You don't want to mess with that. So what we're waiting for is for the market to get into a place that makes sense. Right now, we're in the middle of nowhere, so I'm not interested at this point in time. What I would rather see is gold to either drive lower or rise higher and get our area back down into that 1250.8 down to 50.1, or back up towards 53.4 to 54.4 and look for some selling pressure below and buying pressure below, selling pressure above rather, to kind of fade both of these sides of the range. Both edges are being very well defended by buyers and sellers, so any attempt to break out of this, if it's not very strong, probably going to be a failure. Over on the bonds, very range-bound momentum. It is the bonds after all, but we do have a pretty good trend, all things considered. The upside swing that we've had really kind of kicked off at around 2:30, 3 o'clock this morning, and didn't let off the gas pedal. We had a couple pullbacks to double bottoms, very frequent today in terms of the move higher, but the buyers still own the market, and they're not really letting it go for more than a few candles underneath the moving average before they shove it right back up. Now, we are forming a big area of interest between 151.11 up to 151.13, as well as, which I would rather be on the buy side, at the lows at 151 even up to 151.02 or so. And then if they can start breaking below that, also support at 150.30 as well as 150.27. that we can find some areas of support there. Again, I would much rather be a buyer given the overall trend here is to the upside at the moment. I would love to see a buy move with a quick little snap back down to that support area, maybe even a trap below that, and then kick things right back off towards the upside. I'm not expecting it to go through the highs, and if it does, not by much, mostly just because everybody is going to be taking profit up there, having had to have waited so long for this to get back up to the highs. It wouldn't be a surprise to see a lot of stalling up at that 151.13. On crude oil, obviously today being inventory day caused quite the commotion with a big run higher. Came out slightly lower than expected in the hundreds of thousands. I believe it was 800 and some change thousand. They were forecasting in the 1.3 to 1.8 million area. So pretty much right as expected, a little bit less so. And the buyers really like that news because they rocket shipped this thing to the upside. A big movement towards the top, and they finished off, and just recently finished off, that major upside objective at 49.49. Now, that's not the only objective, right? The next objective would be the news candle doubling up on itself, which would be at 49.70, and that's the next area where buyers are going to be looking to continue. We are very high in this move, and we are cycling off of a major objective where buyers are taking profit. I do not want to buy right now. What I would rather look for is a pullback. I want to buy between 49.26 down to 22, maybe even a little bit below it, and if we can get a deeper pullback, 48.99 to 48.93 is the next area of interest to try to ping that move right back up towards the highs. We still have upside objectives, but given the overall sentiment and the buyers taking profit at 49, I would rather wait for a slightly deeper pullback to get as good of pricing as we can. Over on soybeans, really nice bearish trend and a complete reversal of the morning move. We had a very range-bound start, pushed up into a new high, completely failed down to a new low, and then we've been stuck down there ever since, forming a possible bottom of a wedge and getting a little bit of support down there. We do also have a bear channel working its way lower, and overall, the sellers have owned the market really since about 6:30, 7 o'clock. So with that bearish tone in mind, sellers are going to have a hard time selling at the lows because we do have a wedge bottom. There is support underneath us. So what I would really want to see is a trap above that 971 area. If we can get a little bounce above that, get a trap above 97.1, maybe even test that 72.25 area, which is last week's close, or last week's low rather, that would be a nice potential area for a drop attempt back down to the lows. Now I say attempt because we've seen the sellers really grindy. They're not getting a lot of conviction, not like the buyers back here and here. We're not seeing that consecutive boom, 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 boom. We're getting a lot of back and forth. So because of that, we know that the sellers aren't super interested in selling low. They want better prices. So what I would rather see, again, is a sell a little further back, get an attempt down, and look to take a profit target right around, the lows there. I wouldn't want to put it right at the low because that doesn't make any sense. You'd kind of asking for trouble, but at least digging down to that 968.25 area instead. And then finally, on the S&P very wedge in nature so far, and actually the wedge just widened out a little bit more. We're getting a lot of back and forth here, and this back and forth that we're kind of stuck in right now appears as though the buyers and sellers are really kind of duking it out in who controls the market. The buyers have won so far, but not with a lot of conviction. Again, a lot of back and forth, very range-bound type movement. We get a few consecutive bull candles, and then it's pulled right back again. A few consecutive bull candles just to a new high, and then it pulls back again. So we're not seeing that big conviction from the buyers, and that tells us one big thing. Once again, like we were just talking about in the soybeans, the buyers don't want to buy high. They're taking profit at the highs, which means that they're buying low. They're looking for pullback moves. So we're going to be looking for the same thing. I don't want to be buying way up here. There's too many levels that we have to deal with. We have last month's open at 2358.75, last month level at 2353.5 as well, and we are nearing the end of the month. These levels become big areas of contention, so be very careful around those. But what I would like to see is a pullback. I want to see the market pull back and give a better price, whether it's going to be right now, maybe this is all the pullback they have down to 56.5, or maybe we get a little bit more. They try to fake break out of the lows of this forming wedge and then run right back up towards the highs. What I would really like to see, in all honesty, is if we can get a dig down to maybe 2353.75, last month's support at 2353.5, and then we also have major support and resistance for inventory down at 52.75 to 51.75. All of those areas are potential buy zones to push the market right back up towards the highs once again. So that's the game plan, and that's the outlook, and that's what we're looking to do in tomorrow's price action. Now, looking at the news calendar, there really isn't much. We have one big thing going on tomorrow, and that's at 8:30 Eastern in the morning. That is the GDP quarter over quarter. The forecast is 2%, the previous was 1.9%. Not a big difference, but considering that's really the only big news that we have to worry about tomorrow, it might be an early in, early out kind of day where everyone shows up to the party to get that news out, and then they call it a day and they head down to the beach house because they've made all of their money already, right? So keep that in mind as you're going into tomorrow's trading. It could be a little bit choppy sloppy the later it gets into the day. It might be a flip-flop from what we're used to seeing. Lately, all of the Eurex movement and all of the afternoon session movement has been phenomenal. Heck, most of my trades have happened in the afternoon session lately. So I have to imagine that, well, with the big news coming out at 8:30, we might see that flip where we have really good price action for the US session morning, and then everything calms right back down again. We'll have to see. We'll play it by ear. And like we always say when it comes to that kind of stuff, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all tomorrow.